Hi, as a value investor, I'm looking for investments that I can buy that are cheaper than what they're really worth. I want to buy $1 but for 50 cents. And today I'm going to start a two-part investigation into an industry that I think is a 50-cent dollar. I'll try my best to balance my theory for both the upside and the downside. And the industry, well, it's the tanker industry. No, not those tankers, but these ones. I don't take many big bets like this, but this is by far my biggest investment of the year. And for those of you who are new, welcome to my channel. My videos are about investments that anyone in the world can make. Now, normally I do an analysis of a company in one video, but I have poured weeks of research into this one and there's a lot to it. And I highly recommend doing your own research so you truly understand what's happening in the industry. I'll do my best to give you the highlights and explain why I have made this the biggest investment of the year. And honestly, there is so much going on, so let's just get straight into it. Now, the story begins when I was listening to the audio book called The Dhandho Investor by Mohnish Pobrai. He's a really smart guy and someone I look to emulate. And he tells a story in his book about back in 2002 how he investigated the tank industry and made quite a large investment. So I was intrigued enough to go back and have a look at his thesis from 2002, and that's what got me started on this industry. I then got sucked into a research hole, absorbing everything I could and trying to understand exactly how the oil tanker industry works. So tankers play an important role in how we get fuel for cars, tractors, big machines, and aeroplanes. And learning about how all this worked led me to find that 2020 has been a fascinating year for the industry. Way back in 2002 to 2008, China was growing at around about 20% per annum, and they really needed oil, and the world needed oil, so demand was strong. And the oil tankers were busy, and they were making really good money. So like anything that makes a lot of money, by 2010, a lot of private equity firms started putting a lot of money into building new tankers, and a lot of new tankers were going on the water. And this oversupply drove tanker rates down really low, so low that a lot of these businesses were not making any money. Now let me make something really clear. Tankers are not a great business. They have inconsistent growth and a lot of depreciating assets. And normally I would stay far, far away from such a bad business model. But the industry is cyclical, and every now and then the tankers make a lot of money, and I mean serious money, like a 50% return on equity. Just for reference, that's like buying a house for say $100,000 and then in the first year renting it out for $50,000. Now let me explain exactly how they are making this money. The price to hire a tanker is called the spot rate, and the spot rate changes every day. For example, let's say you have a big tanker, and we'll call it a VLCC, which is a very large crude carrier. Now, an oil manufacturer wants to send oil to a refinery, and they try to find the cheapest rate to transport the oil there. The manufacturer asks the broker what tankers are in the area that are available to take the shipment. If only one boat is available, well, they can charge a really high price, so the spot rate on that day is going to be high. If there are 5 tankers available, well, the price is going to be really low because each of these 5 tankers are going to outbid each other for the work. This is simple supply and demand at work. So in 2010, there were more tankers than there was work available. So the price was really low as all these tankers competed for work against each other. Whenever you have too much competition in an industry, well, profits get whittled down. So for a long period, the tanker industry didn't make any money. It was a really tough time, and predictably share prices were really poor. But after a long, tough 9-year period, well, things are starting to turn. See, tankers have a lifespan of 20 years, and this is important because every year some tankers are taken off the water and sold for scraps. The company can either replace this scrap tanker with a new one, which is obviously very expensive, or they can just not replace it at all. And over the last 9 years, slowly but surely, supply of tankers has slowly decreased more in line with demand. And there was hope in the industry that higher spot rates would return. An important point to note is that it takes about 1.5 to 2 years to make a new tanker. Right now, the orders for new tankers are at their lowest levels since 2005. The 2021 order book is expected to be the same as the scrapping rate. This is a great indication that supply of tankers will stay at their current levels over the next few years. But why are companies not going to build any new ships? There has to be a reason. Do they think that the market is going to be weak in the future? Now, not every investment is perfect, and this is one of the concerns that I have for this particular one. My concern is that companies with all of their new money, which I'll explain in a lot more detail how much money they're actually making, they're going to build more ships, right? This will increase the supply of tankers and therefore create more competition. More competition means that spot rates will be driven down, just like what happened in 2010, and that's my concern that it could happen again. Now, it could happen, but I think it is very unlikely over the next few years because of this big reason. Now, obviously, oil tankers are not the most environmentally friendly things. So there is this governing body called the IMO, and every 10 years or so, they bring in new rules and regulations to up the standards of environmental impact of the oil industry. So maybe the tanks will have to be in a different design, or the engines will have to be electric. No one really knows. And the next rule change is actually in 2030. Yeah, I know that's 10 years away, but the tanker industry needs to plan now. See, if you have a 20-year-old tanker and you've just sent it away to be scrapped, well, you're going to want to replace it. But what are you going to replace it with? A new tanker? Well, that is a big risk because no one knows what the rules for IMO 2030 are yet. You wouldn't want to waste your money on a tanker that wasn't compliant in 10 years' time, so you only get 10 years life out of a new tanker. So what do you do if you're the CEO of an oil tanker company? Well, you wait. You wait until you know what the rules are going to be so you can order the right thing. Now, we don't know exactly when the rules are going to be announced, and they haven't been announced yet. And remember, it takes 1.5 to 2 years to build a new tanker. So the way I see it is that oil tanker companies are not going to be buying lots of new oil tankers anytime soon because they just don't know what's going to happen. So I think this will keep tanker supply very stable for the next 1.5 to 2 years. So if the supply of tankers are stable, well, the spot rates aren't going to get cheap. This is one big positive thing that I see for the companies involved, that they're going to have stable competition for the next few years. Now let's look at the oil supply issue. Before the lockdown crisis, there was already an oversupply of oil in the world. Storage facilities around the world were reaching capacity and the oil price was falling to try to get rid of this excess oil. Then the lockdown happened and the roads are free of traffic and the airports are all closed. The lockdown has severely impacted the demand for oil. Now, it would make sense to just stop producing oil, right? Because no one was really buying it in April and May and the prices were really low. Well, that would make sense, but the oil world, well, it's a bit crazy. See, the businesses that extract oil from the ground, they can't just turn off production. It is really expensive to start up production again, and many businesses would actually go out of business if they were to stop. It's not like turning off a fire hydrant. So they have slowed down the best that they could, but a surplus supply of oil is still happening, even right now. So especially in April and May, there needed to be an alternative storage solution, and this is where the tankers came in. We have seen for the past 2 months tankers being used for storage. Now, this isn't hypothetical. This is actually happening right now. You can see the dozens of tankers off the coast of Long Beach, California, the coast of Singapore, and just chilling out at ports all over the world. And of course, tankers are getting paid to store this oil. And this is far from normal behavior for oil tankers because normally they're used to transport oil, not store it. Now, as oil tankers were hired to be used for storage, well, that means there was less supply of tankers transporting oil throughout the world. And this has driven the spot rates for oil tankers really high, especially in April and May. At the end of 2019, there was a big jump in the rates for tankers. This was because there were sanctions put on a Chinese tanker company, and this took a lot of tankers off the water for a short period of time. It spikes again in March when the lockdown started and a big surplus was needed to be stored on tankers. So it is a wild market. Prices can go very crazy very quickly. So let me say this now. This industry isn't for those who can't stomach a bit of volatility. Now, the average cost to run a tanker is conservatively $25,000 a day, but the price to rent a tanker has been extremely high. Yes, it is volatile, but above that red line is profit. And the last 6 months has been very good to the tanker industry. Now, more recently, say the last few weeks, well, oil demand throughout the world has actually picked up. Lockdown measures are starting to be lifted and refineries throughout the world are desperately trying to get some crude oil in. So maybe we're not that far away from things returning to some sort of normality, but it will take some time, and all of that excess oil will take some time to work its way through the system. So what does that mean for the tankers? Well, I think that the tankers that have been used for storage are going to join the fleet again, so I think spot rates are going to come back down. This is just my guess, but I think the overall thesis for the next few years is still very solid. And let me put the thesis very simply. The supply of oil tankers is low and projected to stay low, therefore spot rates will be higher on average. Yes, they might drop a lot in the short term, but I think it will be just a short-term situation. Another big takeaway is that the tanker companies have been making a lot of money in the past 6 months. So even if the spot rates reduce in the short term, well, there has been a lot of money being made recently. This strange time has been a big bonus for the tanker industry, and they've been making these unusually high profits. Okay, so let me summarize everything we have so far. I think spot rates are going to be generally strong for the medium-term future for these reasons. 1, there is practically zero new ship growth for the next year or two. 2, IMO 2030 is holding off companies from spending their money on new ships. And 3, tanker companies are making more money than they have for a long time. And we are talking like a 50% return on equity. Now, I'll say this and the rates will crash when the tankers come out of storage work. But the spot rate market is very volatile. And I think over the next few years, it will be mostly higher rather than it is low. Now, all these oil tanker companies have been making a lot of money, so you would expect the share price to have taken off recently. But they haven't, and the reasons, of course, are completely unknown. So my best guess is this. 1, that for over 10 years, the industry has been a very poor investment. Number 2, it isn't a good business model. 3, it is a volatile industry with big swings in income each month. Number 4, the tanker companies have small caps. So this means that big hedge funds and institutional buyers won't invest in small companies. It's just not really worth their time. Number 5, tankers are now coming back into the fleet and the short-term spot rates could be pushed lower. And number 6, I just think a lot of people haven't put the time into understanding what is actually happening. But this presents an opportunity, and I think a really big opportunity. In the next video, I'm going to go through the actual tanker companies themselves, and I can tell you now that they're trading far below their fair value, and I'm talking far, far below their fair value. I think it could take a few years for this theory to actually play out, and as a value investor, I'm very happy to just be patient and wait. I think this could be the best investment of the year. Well, time will tell, and I'm going to go through exactly the companies that I bought in the next video. I just want to quickly give a shout out to these people for doing a lot of the hard digging into the industry. It's made my life a lot easier. I'll have a link to these guys in the description and be sure to check them out because you'll get a more rounded view of the industry. And I strongly recommend doing some further research if you're interested. I hope you took a lot from this video and maybe I've piqued your interest into the crazy oil tanker world. And before you go, make sure you like this video if you enjoyed this in-depth analysis. And remember, the next video I'm going to go through the exact companies. And until then, happy researching.